What is going on, guys? Nick here, back with another video. Airbnb finally went public on December 9th of this year, and usually when a business goes public, they're showing really strong financials and can sell potential investors on that strength. But with global traffic down 60%, it seems unusual that now would be the time for a company whose core business is based on travel booking would go public. So let's take a look at Airbnb's business model, how the business is performing, and what the company is worth now and going forward. Airbnb started in 2007 when the founders Brian Chesky and Joe Gebbia were looking to help cover their San Francisco apartments costs. When an international design conference came to town selling out every hotel in the area, they saw an opportunity. They created a website, airbedandbreakfast.com, to try to rent out airbeds in their apartment to conference attendees. They ended up getting 3 designers to sign up, and they became the first Airbnb guests. In 2008, they brought their third founder, Nathan Belcharsik, a software engineer, to the business. Airbnb has since grown to 4 million hosts and offer a range of property options and unique locations in 220 countries. Airbnb is a business model that I always expected would be a great investment opportunity. Hosts offer to allow guests to book their property in a similar fashion to a rental property. They provide different arrangements and price options from an entire place, private room, or a shared room. Often these are houses in typically residential areas, so the locations you find aren't the usual vacation rental areas. Some Airbnbs are a single room in a host house where the host and the guest both occupy the house at the same time. For those who don't mind having a guest in their home, it can be a great way to make use of a spare room. Personally, I've stayed in an Airbnb twice, and both times the main reason was the convenient location and the price was way better than hotels in the same area. The experience was a little odd because the host both times told us that if anybody asked what we were doing, we had to say that we were visiting a friend. I assumed that this was because whoever was hosting did not have full permission to do so, which could have been a problem for me, the guest, but we didn't have any issues, and I would have no hesitation with booking an Airbnb next time I go somewhere. Airbnb makes its money by facilitating the transaction between the host and the guest. Hosts are buying the exposure their platform provides. Guests are getting pricing, location, and a unique experience options that often were never widely available in the past. They charge hosts 3% of the host payout after booking, and they charge guests up to 20% of the booking subtotal. So let's see how the business is performing. If we look at Airbnb's revenue, operating income, and net income, we can see a business that has had very steady growth. The blue, representing revenue, has shown very consistent growth, but 2020 has definitely taken a hit, as you would expect for any travel industry business. One thing that stuck out to me is just how much gross profit they make. The purple bars represent the gross profit on this graph. This is how much money they have left over from their revenue after subtracting the direct costs of providing the service or goods. What's incredible, but not that surprising, is just how cheap their service is on their end. Now we can see they have yet to have a profitable year, with the most recent year taking a $1 billion loss. So if they're taking in massive gross profits, why are they still showing net losses? Where is all the money going? Well, we can see the money is split pretty evenly between their 4 categories of operational expenses: operations and support, product development, sales and marketing, and general and administrative expenses. Each year they've pretty much all grown at the same rate, but what sticks out to me is what they've done to adjust to the drop in travel due to COVID during 2020. They cut their sales and marketing budget by over $500 million. We can actually look at this year month by month and see just how things have changed for them. This chart shows the number of bookings, cancellations, and net bookings each month. In March and April, they recorded more cancellations than bookings for both months. But impressively, even with global travel down, they recovered close to 70% of their pre-pandemic business levels. What makes this chart even more impressive is if we look at the TSA passenger screening compared to last year. This means that US air travel is down about 60%. I couldn't find a chart as detailed as this for global traffic, but from other reports I found global air traffic is down 60%, so this number should be pretty close to what we would see internationally. Comparing the charts, we see how Airbnb's bookings went down at the same time as air traffic, but recovered a lot more of their pre-pandemic booking levels than actual airline travel has. So with global air traffic at only 40% of what it was, Airbnb has managed to keep 70% of its bookings. Airbnb explained what they think is going on. In early 2020, as COVID-19 disrupted travel across the world, Airbnb's business declined significantly. But within 2 months, our business model started to rebound, even with limited international travel, demonstrating its resilience. People wanted to get out of their homes and yearned to travel, but they did not want to go far or be in crowded hotel lobbies. Domestic travel quickly rebounded on Airbnb around the world as millions of guests took trips closer to home. Stays of longer than a few days started increasing as work from home became work from any home on Airbnb. We believe that the lines between travel and living are blurring, and the global pandemic has accelerated the ability to live anywhere. Our platform has proven adaptable to serve these new ways of traveling. Looking at their balance sheet, they reported $8.7 billion in assets to $8.4 billion in liabilities. So this leaves them with $300 million in equity. They reported $2.2 billion in debt, so their debt to equity is very high. Now, I don't think this is such a big deal because they have $2.6 billion in cash, so this debt isn't a threat to the business. In April of this year, they took out 2 loans for $1 billion each. Now, the companies that issued these loans have done pretty well for themselves because part of the agreement was a warrant to purchase about 8 million shares at 28.35 cents per share, set to expire in April of 2030. Right now, the value of these warrants have increased by $1 billion in value. The shares from these warrants are dilutive, so when the warrants are exercised, they will slightly decrease the overall value of everybody's shares. So let's go ahead and take a look at the valuation. But before I do that, if you could help me out with a quick thumbs up by scrolling down and hitting the like button, I would really appreciate it. I hope these videos help you make informed decisions about stocks that you might be considering buying. And if you could help me out with a quick thumbs up, I would really appreciate it. Airbnb estimates that the total serviceable available market is about $1.5 trillion. This is the total market that they're currently able to geographically reach. They estimated in 2019 that while they had 247 million guest arrivals, they only accounted for 3.8% of the estimated 6.5 billion overall domestic and international paid overnight trips. They also plan to grow their experiences business, and I think that this could add a lot to their future growth. Customers want to do things when they go somewhere, so being able to provide good suggestions and get a cut out of the sale when a customer signs up seems to make a lot of sense. So looking at revenue growth and including the full year forecast for 2020 and 2021, we can see pretty consistent growth over 30%, with the exception of 2020. I think that 30% growth seems like a pretty realistic number for them. This comes out to a PE of 128, but because they have yet to turn a profit, we don't have an earnings per share to base our valuation. So we're going to have to use a price to sales ratio. Price to sales is also just price to revenue. So to convert our PE ratio to the price to sales number, all we have to do is multiply it by the profit margin we expect for the company. So I'm going to look at a range of 5 to 10%, and then we can compare this number to the market cap of the company. Currently, Airbnb has a market cap of $97 billion. Market cap is just the total price if you were to buy all of the shares that exist. So this is what the stock market currently is saying a company is worth. So with a PE of 128 with expected 5 to 10% profit margin, this comes out to a price to sales ratio of 12.8 to 6.4. So with the 2020 trailing 12 months revenue of $3.6 billion, this brings the valuation between $23 to $46 billion. 2021 is forecasted to earn $4.5 billion, so this brings the valuation down to $29 to $57 billion. If we go one more year out to 2022, they're forecasted to earn $6 billion, so this should be worth between $39 to $78 billion. Now I was curious how far we would have to go out to justify the current price, so I added 35% to the 2022 forecast, which would make the 2023 estimate $8.2 billion. This would bring the range up to $53 to $105 billion. Now, I haven't seen any analysts put out a forecast for this year, and a lot can happen between now and then, so this is a pretty far from solid estimate. So my guess looking at the stock over the next year or two is that the share price growth has a good chance of being totally flat. When both Uber and Lyft had their IPO in 2019, I felt the situation was pretty similar to how Airbnb's is today. I really like Uber's business model, and I'm not a huge fan of Lyft's, but I thought it would be a while before the finances would catch up with both companies' price at their IPO. Lyft's IPO opened at $72 per share, and they currently trade at $48. Uber IPO'd at $45, and now they're up to $52. I also noticed going back to 2012, Facebook showed the same flat first year after its IPO. So my thoughts for Airbnb stock is I love the business model, and I would absolutely love to own shares of Airbnb over the next decade. I think the valuation is stretched pretty far right now, and I think if you buy shares right now, you may be waiting a year or so for them to get going. I'm going to be watching Airbnb very closely for an opportunity to get in. Now, if you found this video helpful and you want to see more, feel free to subscribe and hit the bell notification so you know whenever I upload a new video. And as always, thanks for watching.